Have you ever checked your credit score at your bank, then gotten a completely different number on a service like Borrowell? It can be super confusing, right? You start questioning everything. Which one is accurate? Does one matter more than the other? Well, fret not, credit score warriors, because today we're cracking the code on why these scores differ and what it all means for your financial future. Let's rewind a bit. Your credit score is basically a report card that lenders use to assess how responsible you are with borrowed money. The higher the score, the better you look as a borrower, potentially qualifying you for lower interest rates and better loan terms. But here's the twist, there's no single, universal credit score. Imagine your credit report as a giant filing cabinet with all your financial data, loans, credit cards, payment history, the whole shebang. Now, picture different lenders having their own personalized filing systems for this data. They might prioritize certain documents or categorize things differently. That's kind of what happens with credit scores. There are two main credit bureaus in Canada, Equifax and TransUnion. Each bureau collects your credit information from lenders and uses its own unique scoring model to generate a credit score. These models weigh factors like payment history, credit utilization, how much credit you're using compared to your limit, credit age, how long you've had credit lines open, and credit inquiries, recent applications for new credit, differently. So, even with the same information, your Equifax score and TransUnion score might not be identical. Now, let's talk about Borrowell. They're a credit monitoring service that provides you with your Equifax score, along with other helpful tools. But here's the key, the score Borrowell shows you might also be different from the one your bank uses. Why? Because banks might use a specific credit score model tailored to their lending products, like mortgages or auto loans. So, which score actually matters? The answer depends. If you're planning to apply for a new credit card or loan, it's wise to check the specific credit score the lender uses. Often, they'll mention the bureau and scoring model on their website or application materials. However, regardless of the specific score, focusing on building good credit habits is key. Here's the good news, the factors influencing most credit scores are pretty consistent. Make your payments on time, keep your credit utilization rate low, don't go on a credit card application spree, and monitor your credit reports regularly for errors. By following these golden rules, you'll be well on your way to a healthy credit score, no matter which system is measuring it. Remember, even slight score differences shouldn't be a cause for panic. The important thing is to understand the reasons behind the variations and focus on building a strong overall credit profile. With that said, thanks for watching and until next time.